Gold has been correcting over the past quarter, but here's something interesting. While the gold price was falling, central banks around the world have continued to show a strong appetite for gold. According to the latest World Gold Council research, central banks have accumulated gold from April to June. That's the end of last quarter. We can see that there's an increase in purchases close to 289 tons of gold, higher than that of the purchase of second quarter in 2025, as we could see here, the second quarter of 2024 and the second quarter of 2023. So this raises a very interesting question. If central banks are buying gold, who is selling it? And perhaps an even more important question, what are central banks seeing that other investors may not be seeing? This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. So who is selling gold? I believe part of the answer lies with investors and especially for institutional money. And let's take a look at this relationship between the gold and silver. Let's explain the last quarter what had happened by switching to the weekly chart. So think about what happened during the last quarter. We saw that the gold came off and the US dollars depreciated. So gold and silver, we saw that it's not just gold depreciated, but silver also came off as well. But the question is why? So one possible explanation is that inflation and interest rate expectation. Now, if investors expect inflation to remain elevated, they may also expect the interest rate to remain higher for longer. And when interest rates are high, so holding US dollars assets or US dollars and its assets become more attractive. Gold, on the other hand, it doesn't pay interest. So for an institutional investor who is managing their clients' money, who need to report regularly, so there's this opportunity cost to holding gold. So these institutions may have to, they have a relatively short-term time perspective. So when the US dollars and interest-bearing assets become more attractive, some institutional investor may reduce their gold exposure, as we are seeing here. But central banks are playing a very different game. Why? Let's take a look at this chart again. And why central banks are buying? So central banks don't manage their reserve based on next quarter investment performance. Their responsibility is much longer term. They need to protect its country's reserve and maintain liquidity, diversification and purchasing power through economics and geopolitical crisis. And something significant has happened around 2022. And let me just switch to the annual chart and let's study since 2020 onwards. But what I'm trying to point out to you is the year 2022. And I'm interested to look at what have central banks around the world purchased in gold, only central banks. So I'm going to delete off the rest. And what we are seeing here is that 2021 and before all these years, these are the average purchase, but something had happened in 2022, even today, the fifth year running, that we could see that there's a consistency that central banks around the world has been accumulating gold annually at a rate of 1,000 tons per year. So last year dropped a little bit, but I believe this year should pick up again. So there is a number that caught my attention, and let's look at this, back to this demonstration. Let's look at this article. And what is this article about? It is according to the World Gold Council website. The title is about central banks gold reserve survey in 2026. 74% of the central banks surveyed expected the US dollars shares of global reserve to be lower 5 years from now. And at the same time, 84% of them expect gold to represent a higher proportion of global reserve. I don't think that we should interpret this as central banks is abandon the US dollars. The dollar remained the world's dominant reserve currency, but it does suggest something much more gradual, which is diversification. Central banks appear to be reducing their dependence on a single financial assets or currency. Let's zoom this out. So in my previous videos, I explained the inverse relationship between the gold and the US dollars. Let me present this in the quarterly chart where we could see the inverse relationship taking place. That means from the same period when gold moved up, we saw that the US dollars came off. So is this period when gold moved up, US dollars came down, and so is from 2022 until today when gold is higher, US dollars came off. In the short term, higher inflation can actually hurt gold. And let's take a look at this checklist that I've been looking at it, monitoring it every week, every month, every year. Inflation rises. What happened to when inflation rises? Interest rate rises. So is a bond yield as well. And the US dollars will be also become more attractive. That's what we see over the last quarter here. And the gold and silver should come down. So that was our experience the last quarter. And I believe that that could help to explain some of what we saw during the last quarter. But I'm watching this very closely, which is the potential tipping point. And for now, that the higher US yield can still support the dollar, but imagine a future environment where the US bonds continue to fall. Even at this point, is a very risky point down here, and yield continue to rise. But what if that happened, that US dollars continue to fall and the gold or precious metal continue to rise? So how to explain this? Yield are higher yet, but yet a falling US dollars. Let me decode with this hypothesis. Now this means that no matter how much interest you are paying me, I'm not going to load more dollars or US dollars because of the potential monetary, fiscal, and sovereign US dollars risk. It may look like this. Let's go back to this checklist again. Inflation continue to climb and higher interest rate, that's true, but lower US dollars, therefore a higher gold prices, where there's this inverse relationship. And let's take a look at this case study here. Because of the two camps between the short to mid-term outlook by the institutional investors and the long-term outlook by the central banks, it created this tug of war, or what I explained in my previous video as a range phenomenon. So where we had studied in this case study at the beginning of this year about gold and silver, title was silver range before heading up again. So when it reached a peak at a point in time, it was in the month of Feb, I expect that the gold and silver to range bound for a while before it started to pick up again. So then my expectation is that silver, but if you examine the gold, it gives you a very similar reading. So where was silver? The recent low, it was around here at 54 again. So what I'm saying here is that silver may continue to range. So is the gold, because of this tug of war between the institutional investor and the central banks. Central banks are buying, but the institutional investors are selling because they have the short-term outlook. Because of high yield, they have to maybe look into the buying to the US dollars, but they have to offload the precious metal. So there's this two camp, and that forms this range. But I'm also saying that some range trading opportunity around this period, not just in the silver, but also for the gold as well. As we can see on this daily chart, and now over the past quarter, what I'm seeing support because I'm referencing on the last year's support, and on this downtrend, it has just broke above. And what I'm seeing here for gold is that it may have this mid to short term rally, but overall, in this aspect of expectation of higher inflation, higher interest rate, the whole gold precious metal may continue to range bound, but ultimately it may continue to move up and break the high and move higher. So this was what we have studied. If you find what I just shared is useful, please like it and save the link for future reference. And do share this to your friends. My name is Con Hao, and enjoy studying how different markets currently behave to uncover emerging trends, the potential trending market of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.